Hello AML enthusiasts. The UAE AML regulations require all the regulated entities, financial institutions, designated non-financial businesses and professions, and virtual asset service providers to file various reports on the go-AML portal. The regulated entities must identify and report suspicion related to money laundering, terrorism financing, or proliferation financing to Financial Intelligence Unit via Suspicious Transaction Report or Suspicious Activity Report. Given the option of filing two different reports, let us explore the differences between the Suspicious Transaction Report (STR) and Suspicious Activity Report (SAR). When regulated entities detect any red flags in a transaction or an activity, they must report it to the FIU. These red flags may be encountered anytime in your relationship with a customer. It could be either at the time of onboarding a customer, or while executing a transaction, or at the time of payment clearance. But it is crucial to understand the circumstances or conditions warranting the filing of STR and SAR on the go-AML portal. You must file the STR when you suspect an element of money laundering or other financial crimes in an already executed transaction. STR is also to be used for reporting the scenario where the exchange of funds has been initiated or concluded, even when the supply of goods or services is yet pending. While SAR is to be filed when you suspect the customer's involvement in money laundering or terrorism financing activity before establishing the business relationship itself. Regulated entities must file suspicious activity reports when they detect suspicious behaviors or actions of customers, such as non-disclosure of identity details, refusal to provide KYC documents, or other such activities. A suspicious transaction report must be filed when you detect red flags concerning the flow of funds, deposits or withdrawals, or funds transfers to other accounts. SAR is filed when you observe a risk indicator associated with proposed customer's activity or a non-executed transaction. On the other hand, situations requiring the filing of STR are mainly observed while establishing a business relationship or conducting a transaction, including the already concluded transactions. Some examples of suspicions where SAR is to be filed. When the customer is proposing to transact on behalf of someone else and is not willing to disclose the principal. When the customer insists on involving too many intermediaries in the transaction from high-risk jurisdictions with no nexus with the customer's business. When the proposed customer has associations with a sanctioned person. When the customer carries out business activities without government licenses or relevant registrations. When the customer insists on maintaining the secrecy of their transactions and is not cooperating with concluding the customer due diligence process. When the customer has no economic rationale for establishing a business relationship, or the purpose mentioned by the customer is very vague. Some examples of suspicions where STR is to be filed. When a financial crime case is initiated against an existing customer. When the customer carries out a series of transactions in a short time, without any business sense. When the transaction value is exceptionally high in comparison to the customer's income, or contradicts with customer's risk profile. When the customer makes last-minute changes in transaction parameters without any economic rationale. When the customer insists on making payments only in cryptocurrencies, without an adequate virtual assets, wallet identification procedure. Trust that this video helps you identify the right report to be furnished with FIU to submit details about MLFT suspicion. Stay tuned for more insightful learning on AML. Don't forget to like, share and subscribe to our channel, and hit the bell icon, so you never miss a video.